Thank you very much. I'm now joined by Mark Noble. He's the Executive Vice President of Horizons ETFs. Mark, welcome.
Hey, great to be here.
You bet. Mark, it's your first time here.
Right.
And the Horizons HMMJ is the symbol?
It's our big marijuana ticker, yeah.
Right. Okay, so now this ETF invests in a basket of cannabis stocks.
Right.
And they're all Canadian.
No, they're all North American.
Oh, okay.
It's just that the majority of listings globally are in Canada.
Right.
So Canada's ground zero for the majority of listings. So that index ETF is supposed to provide exposure to North America.
Okay.
But there's scant pickings when you go to the US, because if you're in cultivation or distribution, you're actually illegally producing marijuana according to federal law.
Right. So HMMJ does not invest in companies that are operating federally illegally.
No, correct.
Which is all of the growers in the Americas.
Exactly.
Right. Okay. So
yeah.
that's interesting.
Yeah.
So, in your opinion, is the limited basket of mostly North American operators but Canadian companies, is that an advantage in terms of protecting the investors in the ETF from exposure that might still yet result by the fact that it's illegal federally in the United States?
I think it is a big gray area. So you have a lot of people asking us, what do you think about U.S. exposure? And there's only like maybe a handful, I think 4 or 5 states now that are completely illegal. Mm-hmm. Most of the U.S. is liberalized. So at the state level, and when you look at surveys of investors and people in general from both ideologies, I mean, that's a really interesting thing. Whether they're Republican or Democrats, there seems to be an understanding that the prohibition of marijuana needs to come to an end. Mm-hmm. Yeah, for very clear reasons, we've chosen to have a TSX-listed ETF, which means that it won't have any U.S. exposure as per TSX listing standards. It's really important, actually, though, for Canadian investors to know that according to the Canadian Securities Administrators, they're okay with the Canadian listed stocks that have U.S. cultivation businesses as long as they're legal at the state level. Mm-hmm. So that's why the Canadian Stock Exchange has seen such a bonanza of stock listings. A lot of the big U.S. producers are actually listed in Canada. So Canada is very much ground zero for all global listings of marijuana companies because of that progressive framework. It's just that in order to be listed on the TSX, they have to fall in line and make sure that none of the distribution, direct cultivation is occurring that would be offside with federal law. So as a TSX listed security, we cannot hold companies with U.S. cultivation exposure. However, it is important to note that if you look on the TSE, for example, there are a lot of stocks that are what we call direct pure play into the U.S. market, and those are become very popular over the last few months.
Yeah. The largest Canadian company, Canopy,
right,
is now licensed to produce CBDs in the state of New York. Do you think that that is going to have a warming effect to the TSX in relaxing its rules about causing Canadian companies not to trade on the TSX or TSX Venture if they touch the plant in the United States? In that, now that CBD has been changed to a Schedule 5 drug, right, and as soon as there is a THC medicine that the FDA approves, it stands to reason that that too will become a Schedule 5 drug.
Right.
At what point does the TSX ease up on the restrictions, especially since they're losing so much business to the CSE in the process?
Well, the TSX is an excellent partner of ours, so I don't want to go where they're thinking, but I mean, they did give us guidance on the CBD aspect, and so any of the non-THC hemp that's legal under the new agricultural bill, those companies, my understanding, and they're allowed to do that. So what Canopy's doing with investing in CBD and hemp, that's not offside again. So I think there's a lot of openness that as you see more federal restrictions come off, then that allows for more flexibility for the companies to get listings. But of course, we have to then look forward that at a certain point, then the big stock exchanges in the United States, the NASDAQ, the New York Stock Exchange, they're going to get into that business as well when you start seeing federal legalization in the United States, if that occurs in the next 24 months. And then that's a whole different ballgame in terms of exposure. I mean, a lot of the reason that we've seen Canopy, Tilray in particular, Kronos do so extraordinarily well relative to the broader market last year was because of their U.S. listings. what was happening is by achieving that U.S. listing, much easier for U.S. retail investors. I mean, and you do need to understand that the vast majority of wealth, more than any other sector we've ever seen in the capital markets, apart from maybe cryptocurrencies, is self-directed investors buying these. And in the US, which is 10 times the size of Canada, we saw huge flows coming out of last summer into those US listed stocks. And so just by nature of having a US listing increases the potential for the stock by tenfold in terms of the number of investors. So, you know, again, you know, while Canada has an advantage, our advantage right now exists because of that regulatory arbitrage, the fact that we can build a capital markets for our marijuana industry globally in Canada. But as soon as that federal legalization is gone on the US, then you have to realize that all steamships ahead in, you know, in terms of making a huge impact on a myriad of listings, and very quickly that market could take off and be in excess of $100 billion.
Sure. When do you see that happening?
Well, I don't want to go into the minds of politicians. What I do find really interesting is that, you know, we've seen how successful the global market has been in terms of how much money is going to be made, even just on medical. Yeah. I think most numbers in the medical market are kind of putting it around $50 to $60 billion. And when you talk to the big companies, that's really where they want to go as well, because at the end of the day, growing marijuana itself is an agricultural crop, and that's obviously that naysayers, people like to short this sector, are against. The part they miss is that the IP aspect, when it comes to the pharmaceutical aspect of it, is extraordinarily lucrative. It's a pseudo, or in some cases, a straight-up pharmaceutical drug. So you have the ability to have that IP and charge a lot more from a margin perspective. So there's a lot of money. I mean, Canada as a total market is maybe capped out at about 22 billion. But you could grow another 55 to 70 billion on the global medical, not even recreational market. And so we're already seeing big inroads happening in Germany, Israel, Australia, Denmark, and South Korea recently did medical marijuana. The UK looks like it's ready to roll out medical marijuana. These aggregate markets are massive. I can't see the United States, where at the core of what they do is capitalism, wanting to give that to all these other nascent providers when they have, a lot of infrastructure already in place, because they did have first mover at the state level. So there's a lot of brain trust, a lot of well-established infrastructure for them to get involved. They're just being hamstrung by the fact that they can't get the capital markets funding by not using the US capital market system.
Interesting. Mark, that's a great bit of perspective there, and so we're going to leave it there for now and come back to you in due course. Thank you very much.